Monday, June 10th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about derivatives like ETFs and futures and how they're an instrument of the banking cartel, the central banks, to control markets, and why it's very important not only for precious metals investors but also people who want to get into cryptocurrency to avoid ETFs and futures. If you are looking to invest in precious metals, you should do it physically. You shouldn't do it through a broker, through a bank, or through a fund. It's very important. You need to buy physical gold and silver. That's the only way to protect yourself. Yes, you might buy the ETF for gold, GLD or SLV for silver, and the price might go up and you sell it and you make a profit. But that's not the point of gold and silver. It's not the point of Bitcoin or Ethereum or EOS or LITECOIN. The point of those currencies or instruments are to not play the bankster's game. And how do they how do they use your exposure to those ETFs and futures to manipulate the markets? Well, when you hold those instruments through the futures brokers or through the banks or through the funds, they can lease it out for people who want to short it, and they can manipulate the price as well. So the more people get involved, the more they can do to it. So I've advised people for many years, not only through this channel, but also colleagues, friends, and family who ask me, oh, how do I invest in gold? And I said, it's very simple. You just buy some coins or bars, silver, the same thing, and make sure you keep it very safe. Don't buy futures or ETFs. Those are not real. They're not real gold, and they keep people from getting the physical. And the less people get physical, the more the central bankers, the bullion banks, can control those markets. And that's what I want to talk about today, and I'm going to look at the markets towards the end. Many people have asked me, for recommendations where to buy gold and silver. I've got a promo code, maneco64. If anyone's interested in starting to stack gold and silver, they can go to goldinvestments.co.uk. They're one of the arguably one of the oldest bullion dealers in the city of London. They're family run. For my UK viewers and viewers all around the world, because they do ship, but you might need to check the shipping costs. You will get a 0.5% discount if you use the Maneco64 promo code. So yes, not only in the bond markets or interest rates or a stock market are derivatives used to manipulate the markets. So that's why it's more important than ever. The other point is you want to be outside the system as an insurance. So you've got to make sure that you have the real physical. And the more people continue to stack gold and silver, the less the supply of gold out there for the bullion banks and the central banks to manipulate. Of course, they'll still try to use the paper market to do it. And how do they do that? That's what I want to get into. A lot of, not a lot, but all these derivatives, be they over the counter, which means they're not publicly quoted like in futures exchanges. They're traded on the phone between counterparties, and usually it's the big banks or brokers who write up these things and their clients come and trade through it. Yeah, the thing about derivatives is they are all very leveraged. So it can work both ways. They can entice people to come in, put only 5% down of the nominal or notional amount of the derivative contract, because that's all it is. It's a contract to to take delivery of gold and silver, like on COMEX. But you need to understand that on COMEX, 99.9% of all the trading that goes on that exchange is just paper trading. There's very little physical gold and silver, exchanging hands. It's purely a casino, and by leveraging, the how can I say, the trading there, they don't really have to have all that gold and silver to go long either, but also not to go, also to go short. And that's why it's important to buy physical. It's highly leveraged. Some people argue it's 100 to 1, but and that is not right, of course. It doesn't make sense. But so is the foreign exchange market, because gold and silver are also traded as a foreign exchange pair, mainly in the LBMA and also through the banks, the bullion banks. The bullion banks, if you look at them in London or New York, their desks are not on the commodity desk. They are on the FX desk. And foreign exchange is also leveraged. If you take a position in the euro, long euro versus the dollar, you only need to put 5% down as well. Of course, if you do a foreign exchange transaction, if you go travel abroad, that's not how you do it. But that's how the banks do, and the speculators. They will take, they buy the euro versus the dollar forward, let's say for a month. But let's say they buy 100 million euros versus the dollar. They only have to put around 5 million euros down in margin. So, and that's how the precious metals market is played. And that's how I would think, they would want to play the cryptocurrency market. I know I think there's been, for a year and a half now, there are some futures in the Bitcoin. And I also see a lot of people saying that, ETFs are going to be great for cryptocurrencies. No, I think, it might up a little bit of interest from the public, but it's a bad thing. ETFs are like defeating the purpose of cryptocurrencies being decentralized and not being at the mercy and control of Wall Street and the bankers. So that's what I wanted to talk about today. Now I will look at the markets, see what they're doing. Of course, over the weekend, there's been some news about the trade wars, especially with Mexico. It looks like Mexico has agreed to reform its border policy, and so President Trump has dropped the tariff threat for now. So that, of course, has helped the stock market. I saw last night, right off the bat, I think the Dow future opened up, I think it was about over 200 points. We got up to 26,223. Right now we're at 26,065, so we're only up 83. By the way, it's 7:41 a.m. London. S&P is up 11. So the markets are, they've come off a little bit. They're up about a third. NASDAQ 100 future is up 25. Gold and silver right off the bat, when the markets opened last night, London, or late yesterday in the States, they were hit hard, and they've continued to be hit hard this morning, even though the stock market has come off quite a bit. Disappointing, but I've been in this holding and accumulating or stacking gold and silver for many years, and it is frustrating. But we need to look at the bigger picture. central bankers, they have lost control. Their policy of heavy inflation, monetary inflation, hasn't worked. They can't get things going, and they're going to try again. And you need to hold on. Right now, spot gold is down 13 or 1%. No reason really for it to be down this much, but as I said, these how can I say, bullion banks, the central banks, they're going to try very hard to block gold from making new highs, to going through that 1375, 1380 level. But personally, I think they will not succeed this time. So how do they manipulate the gold market in Asia? Well, the BIS, Bank for International Settlements, they have a representative office in Hong Kong. So they could already be working, overnight, Sunday nights through Hong Kong. So that's how they do it. They've got their tentacles everywhere, unfortunately. So yeah, gold right now is 1327. The low's been 1325.65. Silver as well. We closed around 18 on Friday. We're now 1478, down 22 or down 1.5%. Yeah, it's a little bit like 2 steps forward we've made in gold and silver the last few weeks, and this is 1 step back. I'm not concerned. Sterling or cable is down 0.25%, down 30 pips at 127.05. The euro is down 0.2% at 113.12. And the dollar actually is up 0.5%, almost 0.5% against the yen, 108.64. So if gold was down maybe 1/3%, I would understand. But being down 1%, you can see that they didn't want it to continue to go up for now. Dollar yuan up slightly. It's at 694.78. So the dollar is still fairly firm there. The WTI crude is up 0.75% at 54.40. Brent is up 0.5% at 63.20. The bond markets this morning, yields have traded up a little bit. The 10-year yield is up almost 5 basis points at 2.13. The 1 month is at 2.34. So it's still heavily inverted, the yield curve. And I don't think central bankers are out of the woods. I don't think the economy is out of the woods. We saw on Friday, I said that, in my Friday video, I said that being a bit cynical, I would think that the non-farm payroll job would be weak, so they could justify a rate cut. And lo and behold, it was a weak number. I personally think a lot of these statistics are doctored anyway, and that we've been, if you take into account all the budget deficits, huge budget deficits that the US and even the UK have been running, real GDP, really, if you look at just the private sector, has been shrinking for many years. Try to avoid anything to do with Wall Street in terms of precious metals or cryptocurrencies. Buy the real thing if you really want to protect yourself, and if you want to fight this corrupt, how can I say, credit-based funny money system that the bankers control. And you might ask, what about the regulators? The regulators are just lackeys of the banking cartel. You saw what happened here in the UK with the Woodford Fund. FCA was asleep at the switch. Foreign exchange market is very not regulated at all. It's they do sometimes punish FX traders, but I would say it's a free-for-all. A lot of inside, there's a lot of front running in FX. One example I would say is at the major banks, if someone trades for one of the central banks, and people are and the markets are moving, and particular currencies under pressure or something, and you see and people see the phone ringing, the direct line from a central bank. All the other brokers see that, traders see that, and they know what's going to happen. Before that trader picks up his direct line to the central bank, all the other traders are front running the order that they know is coming. So that's how it works, not only for FX, but precious metals. And it could be the same for cryptocurrencies. Let's keep cryptocurrencies also out of this system. Keep it decentralized. That's my advice. Don't look to have ETFs or futures, or if they come about, don't participate in them. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you share these videos far and wide with people that you think might enjoy this content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.